In our cover story, kaput, by definition, broken and useless. That may also describe Russia's currency, the ruble, after Russian President Vladimir Putin boxed his country into an economic corner that's getting smaller with every drop in the price of oil, Russia's chief export. And now a White House spokesman says President Obama will authorize more sanctions against Russia and military assistance to Ukraine. The ruble is in free fall and gaining speed, dropping 50% for the year against the dollar, 22% of that in the last month, 11% of it since Monday.
The Russians have basically made this bed for themselves. One thing they weren't counting on was oil tanking. So this combination of sanctions against them and then at the same time oil tanking has caused massive turmoil at their central bank.
It led Russia's central bank to raise interest rates to 17%, an emergency attempt to stop the ruble from falling further.
I think worst case scenario, you can see a run on the Russian bank. If we don't see oil prices stabilize pretty soon, I think the problems in Russia are going to get a lot worse. And I think it's going to impact not only Russia, but some of their trading partners like Germany and the rest of the region.
The economic vice applied to Russia is tightening. This week, President Obama is expected to authorize more sanctions against Russia, its state arms exporter, barring investment in Gazprom, Russia's energy giant, and restricting international companies from technology transfers to Russia.
A lot of their companies have no access to foreign capital because of U.S. sanctions. So what the central bank is trying to do is keep the currency propped up in order to stop a flight of capital.
The president's signature also authorizes $350 million in military assistance to Ukraine. It all coincides with OPEC's strategy to flood the market with cheap oil to discourage U.S. producers. But it's hurt Russia more than oil producers here.
They get it over there at OPEC, but at the end of the day, how long are they going to bleed out? At the same time, they're trying to cause impact to the U.S. How long are they willing to force most of the member countries into the red, having to draw down on their own foreign currency reserves? Even in Saudi, they're beneath break even now.
Oil's impact on the bond market reached to Alaska late Tuesday. Moody's Investors Service cut the state of Alaska's outlook from stable to negative, saying oil's plunge now threatens to cut the state's budgetary reserves.